I am Jim Iuorio. That's Bob Iaccino. Thank you guys for joining us. By the way, this show has been wildly successful. On average, we get between 8 and 10,000 live viewers watching this show. To put that in perspective, that's about this much less than CNN gets in their daily programming. And our stuff isn't even meant to be viewed live. It's a podcast. It's meant to be out in the ether. And you guys watching it the way that you do and at the rate that you do, we have nothing but thanks for you guys. Bobby, I'm almost done with my coffee. So as you can see, the caffeine is starting to kick in a little bit too. But
starting to kick in.
But 6 months ago, I gave up sugar when we started doing the Dr. Baker stuff, but I did put like a little bit of honey in my coffee today for the first time in months. The sweetness of it is like almost disgusting to me now after 6 months. Do you find that when you taste something sweet now?
It's a very strange thing. That's one of the parts about, like, me, I'm pure carnivore, right? So that's one of the parts about the carnivore diet that people don't believe me. Like, obviously Thanksgiving, there was pumpkin pie, there was apple pie, there was cinnamon, this and that. I had them. The next day I had a hangover and I didn't drink that night. It literally has the same effect to you. When I have something now that is even normal sweet, it's too sweet. But this was my lunch today. So
now we're talking.
Yeah, I'm definitely, you can see I was working at my desk when I had my lunch. Well, I was eating at my desk. I don't know if I was really working, but it turns me off like you can't believe.
No, I know. So I then had some eggs cooked in butter just to kind of try to balance everything else out.
Good stuff.
Anyway, good stuff. Before we get to our guest, who you guys are going to love our guest, today CPI comes out 2.7%. Market rallies to beat the band. My contention is that the market knows that right now that's the sweet spot. Whether or not Jay Powell says it out loud or not, 2% is not really the goal for the next couple of years. Between 2.5 and 2.8. I think they'd rather have 2.5. Do you agree with that thesis?
I agree with you, and I wish they would repeat it because they have already said it. Remember when Jerome Powell said, let's call it 4 years ago? I don't know exactly when it was. If anyone has access to LexisNexis, you can look it up and let us know somewhere in Twitter or in the comments. When he said we may have to have inflation run above 2% for a while to get an adjusted average of 2%. And all I kept saying after that is I took statistics. I don't know what an adjusted average is. Maybe it's this.
I think it is this. Yes. Anyway, as I've said a million times before, and I will say it again, Bobby and I have been on media for 25 years. You are maybe familiar with us. You may think our opinions are full of shit, but one thing you can't deny is that we have made some excellent connections and get some fabulous guests. Today is no different. I'd like to bring in Anne-Marie Band. You guys all know her. Anne-Marie trades on Twitter. She is the voice of reason in the financial trading economics world. Let's bring in Anne-Marie. There she is. How are you, dear?
Doing great. How are you guys?
Good. I have a question. Okay, because I know only because you've told us that you're somewhat of a contemporary of us. I would have never guessed it by looking at you. We were just talking about sugar and diet. Now that you are the age we are at now, do you eat sugar? Do you have a strict diet? How do you look so healthy and glowy and good all the time? And you can compliment me then anytime you want after that. Go on.
Well, actually, everybody has very good skin here. And I know just what you're talking about. When you give sweets up and you taste them for the first time, you're like, wow, that just doesn't do it for me anymore. So we've been doing the same thing for quite a while, and it's been truly transformative. We don't do any gluten at all, and we don't do any sugar.
Yeah. When you say like transformative is the exact way to say it. It's when I started this about 6 months ago, the only thing I don't like, which other people may, is I was kind of starting skinny and now I'm skinnier and I think I look a little older, but I feel fabulous. I sleep better. I'm more energetic during the day. This has been the most transformative health thing. I gave up gluten like 20 years ago, and that was a good step, number one. But now giving up sugar and the rest of processed carbs, God almighty, it is unbelievable. Bobby?
Yeah, I mean, since I moved to Southwest Florida, I'm actually down just short of 40 pounds. And the strange part about this is I've done that in my life. I've done it before. I mean, I'm a glutton, right? I drink, I eat a bunch of freaking lasagna, whatever. And next thing you know, I put on 15 pounds. And I'm like, leave it. And then I just keep piling it on there. this particular time, when I've done it in the past, I've always lost strength. You know, I've been a weightlifter since I'm 14 years old. This time I gained strength, losing weight. And that to me was like, I don't care what malady I'm causing myself. I have no joint pain. I've gained strength. I look younger. I look better. And I'm down 40 pounds.
Wait a second. That's looking better for you? Jesus.
Yeah. Yeah.
That's the tempo here, Henry. Sorry about that. Anyway, you heard us. We were talking about that 2.7% print in the CPI today. Stock market rocketed. Gold rocketed. Silver, Bitcoin. I'm not sure. Bitcoin's kind of marching to its own drummer. So let me retract that. My belief is that the market broadly, all different assets, look at that and say, you know what? The Fed's not going to be disappointed with that 2.7 and is not going to dissuade them from staying on their easing cycle. They need more info. What do you think?
I think you're spot on. Spot on there. They have to, because their debt load requires that they have to.
Yes, there's no question.
I mean, simply put.
Yeah, there's no question. So does that mean ultimately that you are now still a bull? Is there a Christmas rally that continues beyond? And is it fueled in part by the fact that the Fed may be more accommodative than the actual economic situation calls for?
That's a hard question. So the reason that it sounds like I'm punting is because I think there's some cross currents that really have to be addressed in terms of the rates coming down, but also a new administration that is very likely going to try and tighten up liquidity. And that, with the outrageous predictions they have for next year, I mean, outrageous. I'm not quite sure how they're going to get those.
You mean like $2 trillion off the deficit and things like that, right?
Yeah.
Yeah, that's nonsense. Please, I didn't mean to interrupt you. Go on. Yeah.
Oh, no. That's absolutely right. And so I think it's a little bit of a Gordian knot. And I think there are going to be some spaces that are more reflexive than others. But it always looks fantastic before the sun starts setting. As it goes.
Bobby?
Oh, I'm sorry. I lost you guys there for a second.
Oh, no. Yeah. Sorry about that. Yeah.
Yeah. First of all, RJ, Remo, good afternoon. You guys are saying hi on here, and I always appreciate that. You know, I've been doing some work on tariffs. Jim and I both do separately, both do weekly spots on Scott Shelley's show, right? The Cow Guy Close. What's the name of the network again?
RFD TV.
Yeah, RFD TV, which is sort of this cable middle of the country channel. I just love doing those hits.
Yeah, it's a great
Today
station.
we talked about tariffs, right? And I talked about how there's really, people keep coming on and basically saying it's binary. Tariffs is inflation, period. And I look back at Trump's last term and we didn't get it, right? And he put most of his inflation in place in 2007. I'm sorry, his tariffs in place, 2017, 2018. And the lines just don't match up to the tariffs being part of the inflationary spike that we got based on COVID and the supply chains and the free money from the government and everything else. You could blame Trump for his part in that, but not for the tariffs. So then I went back to find any other examples of sort of a tariff president. We're talking about Herbert Hoover with the Smoot-Hawley Act in 1930.
Anyone?
And after all those tariffs were implemented, we got deflation. Now, obviously, each economic situation is different. But do either one of you see any reason that these people should be coming out and saying tariffs are inflation, period?
Can I answer first?
Yo, of course, you always get to answer first. People are tired of hearing our bullshit. They want to hear your bullshit.
Not even. That's why they tune in. So my thought is that, first of all, you tout tariffs as a bargaining chip, But at the end of the day, let's take a look at it. If there's no new money that gets thrown into the system, because liquidity is what creates the inflation environment, in my mind. So the more of it there is, the more inflation that we're going to sit in general. And so I believe that tariffs are actually deflationary if no new money goes into the system. And here's what I mean by that. I have a basket of goods that I exchange for money when I go to the store. I go in, I find out there's a tariff on oranges. I normally buy 10 in my, okay, here's how much you get to spend on your oranges. Now I can only buy 5. So I have to make a choice. If I got a bunch of kids to feed, then I go, all right, well, maybe I'll just not buy oranges and go buy apples, or not buy oranges and go buy whatever. So the guy who owns the market is going to say, oh, I've just passed on the price to my customers, and now they're not buying my oranges, and so they're rotting on the stalls. And so he either goes, I got to eat some of that profit, I got to eat some of that tariff, or I'm not going to get as many oranges. And we choose something else. It happens all the time. It happens all the time. We just move to a different area, because even though supply and demand can get stretched by very big entities, at the end of the day, money always finds the easiest way to get what it wants.
So, Jimmy, she's talking about the replacement theory of inflation, right? Which we've talked about before. There's RJ Scott, has the best afternoon TV show. Yeah, we love you know, and he's the last one I cancel on. I cancel on Fox before I cancel on Scott.
Right.
Anyway, he's also a really good friend of mine and Jimmy's. Jimmy, your answer to that question, but I want to add something to what Anne-Marie said. Do you think, Jimmy, that's why we get deflation, because of the replacement theory, where people either buy less of the things the price has gone up, or they shift to something cheaper and you get sort of a slightly slower consumption level, maybe?
Well, that and the fact that the country that's being tariffed could easily, and you said the person that owns the market, so I assume we were talking about once products get to our shores, but it could easily be that the country that is shipping us the products will decide to eat some of that too to remain competitive. And we're talking about countries that have done that all the time as well. Now, one thing I think is really interesting, and by the way, to start off this discussion, I don't know what the answer is. I think tariffs are very nuanced, and it's somewhat of a chaotic system, so I don't know. I think one of the things I think is that it's just a cudgel, it's just a bargaining tool, and he's trying to angle for tariffs being dropped, which would 100%. Be disinflationary. But the reality of it is they could easily be dropping their prices. There could easily be replacement theory to goods that are priced more attractively. And keep in mind that regardless of what the bullshit that CPI says, I know firsthand from supplies at the restaurant that things have gone up probably closer to 35% when you're talking about food and energy and things like that. So people are stretched already. Probably 60% of the population is living paycheck to paycheck. They're just not going to pay it. They're going to make other decisions, to Anne-Marie's point. So I'm not a fan of tariffs. Neither is Donald Trump. You know, I know that when he came on TV, he was saying, tariffs my favorite word. I love tariffs. That's the biggest amount of bullshit I've ever heard. And all it is trying to convince who's at the other side of the negotiating table that he's serious about this, right? I mean, what am I missing, Anne-Marie?
Oh, you got it spot on. The guy's the negotiator.
Yeah.
He comes from a business space. He's a businessman at heart. He's negotiating. And I think a lot of times, you know, political structures just yammer about things because they think it sounds good, and they just don't dig hard into where the rubber meets the road.
Amen. And one thing to add to that too is it probably will not be hard for people to do the math on this, but one of my close friends is a close friend of Donald Trump's and an advisor to Donald Trump. And he had told me, he said, Donald Trump takes advice on everything. He listens, he weighs everything, but you don't tell him how to negotiate, because he fully believes, maybe not even wrongly, he fully believes that he's the master at that. And my buddy wasn't even saying that he's not. He's just saying that he's always got a plan and let's just hope it works out. But anyway, let's
Well,
move on to
real
actual,
quick before we move on, Jimmy, if I could, that takes us to what James Fishback said in a speech he gave a while ago, that you should take Trump seriously, but not literally. And I think that goes right to it. And I want to keep using that line.
That's a good
until I
point.
forget to credit him, and everyone said, and now everyone believes I came up with
believes
it.
it's yours. Yeah, that's what you want to angle for.
Really where I'm going with this. Go ahead, Jimmy.
That's how it works.
No, so I like to break it down into individual sectors and markets right now. See, because this obviously, these guys who come on, and we've had guys on the show who are our friends and are very, very smart and say, well, if you look at history, it doesn't matter who's president. The stock market does this, whatever. That's all well and good. This was a clash between an absolutely bifurcated economic system. These two people were night and day. Taxation policy, things that they believe will spur demand. I look at the Democrats' plan. I don't understand why in the world they'd ever put those things out there. I thought they were toxic and destructive. And if you caught me 3 months ago, I had a very negative outlook on where the economy could go. Anyway, the point is that I do think you invest differently based on who's president. If Kamala won, I was going to go way more into gold. Trump won, I still have my gold position, but I moved it into silver. I'm looking to things like platinum and palladium, but they have to move for me first. But anyway, when you look at it, Amory, you look at the landscape, what do you think are the big changes in sector rotations and what may happen?
So one of the biggest things that I'm looking at is what the landscape is going to look like if we go after energy independence versus, energy dominance. And so my suspicion is that we're really going to sort of dovetail a lot more into all kinds of energies where, have you guys looked at natural gas lately? I mean, I know it's winter time, but I mean, it's going through the roof. And I'm waiting for it to fail and make a higher low and then sort of buy that future and roll it over, because I think there are going to be some interesting things there. But
let me show you my scars from trading natural gas. Hold on.
No. I know. It's not called the Widowmaker for nothing.
It is the Widowmaker. But anyway, continue, please.
Yeah. And so something's afoot. And so what I'm looking at is how is that going to affect the energy landscape? And with oil sitting in a big wide swath, a move that's extraordinary is coming. And it's either going to be down to, I don't know, $50, $45, or up to $85. I think it's probably going to be around 50. It needs to stay around 50 for our suppliers and our refiners to stay in business and make a profit. But that's really, the energy sector is incredibly interesting to me right now.
So I had a thesis that I trumpeted for pretty much all of 2024 and then did not trade it. But it was this. It was that Donald Trump is going to be viewed as a drill baby drill president, which could increase supply. But that may take 12 months to 2 years to really show up. And in demand, he's going to be a spur demand president. So on the short end, he might spur demand. So either way, the cross currents in oil might be back and forth. However, the big integrated oil companies who spent the last 4 years being in the crosshairs of some pretty nefarious operators trying to put them out of business. The same week that Congress debated freezing fossil fuel companies from the credit markets, also then called them and said, hey, dude, why is it not pumping so much oil? Which is the most bifurcated, bipolar notion I could ever imagine. But anyway, the point is that normally the big integrateds move in lockstep with crude. I believed that spread could bump out a little bit, materially enough to make money if you had the right positioning sizes on, and it did a little bit. Do you think that trade could be better? Is that if they're not in the crosshairs and people aren't trying to grind them into dust, the companies, they could do well even if oil's flatlining at the moment?
Yes, and potentially but. And so the caveat is you can see from the inner workings of these large organizations that they are, many of them are still leaning towards the ESG kind of space. Chevron said, hey, listen, we're pulling back our CapEx. BP has been notoriously leaning towards other types of energies, and the XLE looks like a dumpster fire right now. So my thought is, even if it's leveling out, there's going to be something going on in there. And something else that's very big, that the quality of the WTI coming out of the ground is shifting into these lighter grades that they can do a lot of things with that we use in household events, but not as much in terms of hardcore energy requirements. And so I expect the spread between WTI and Brent to widen. And that might help these energy companies get better footing. But I truly, gosh, it sounds like I'm punting on everything, but it
really one that
is
you're going to throw a bomb on.
Yeah, it's a Gordian knot right now. So you just sort of have to see what happens, watch for price action, let the inauguration move through, and see who actually gets to go, yes, we're going to do this, because there's a lot of chatter and a lot of hope. But at the end of the day, we know it's all about negotiating with folks who are actually saying, listen, I would rather die than agree with you.
So real quick, first of all, I want to say that I bought natural gas today. So it was interesting that you brought that up. I bought it today. My target is almost 20% higher than where it is right now. Now that's not unusual for natural gas futures. For any of you guys that might want to look at that for yourselves, I am not recommending you take this trade, because I've been wrong in my life, and this could be one of the times. One of the things I was the most wrong about was partnering with Iuorio in anything. But here I sit. Here I sit.
It's like an anchor.
It's like around my neck. No, honestly, our partnership, it felt like, it's felt like 10 minutes rather than 10 years, 10 minutes underwater. But if you look at
so much love.
If you guys are interested in looking at an ETF that I think mimics natural gas futures the best, it's BOIL, which is the ProShares Bloomberg natural gas ETF. To me, that's the better one, because it tracks the futures a little bit better. The second thing I wanted to show you guys is a chart that I just sent Lance in the background there. We talked about this political thing, right? This is a chart of the Dow going all the way back to 1949. Everybody likes, let me rephrase this. Everybody on the left likes to say, with Democrat presidents, the stock market goes up. With Republican presidents, it goes down. The U.S. economy and subsequently the stock market is an ocean liner, not a speedboat. So when it turns around, it turns slowly. But what you see here, what you may notice here, is that the highest combination in terms of performance is a Democrat president and a Republican Congress. Second is just a Republican Congress, regardless of who the president is. And the third is a Republican president, a Republican Congress, and that's what we have now. So performance is more indicative of who's in Congress rather than who the president is. So, and I think that has a lot to do with the Republican Congress liking a smaller government generally than a Democrat president does. So anytime anybody gets that argument, well, we get a better stock market than a Democratic president. Hold on. Let me show you the full spectrum.
I love that image
of things that happen. So this image, the source of this image is me. All of the original source is Mike Singleton of Invictus Research, who has quite a bit of credibility in my eyes. Anyway, those are two things I wanted to point out. The thing I wanted to ask from an energy perspective, since we're talking about energy, and Luis, you can drop this chart if you want to. OPEC had their conference yesterday, and their monthly oil report, they dropped their growth, their demand growth forecast for the 5th time this year. Okay, and that applies to 2024 and 2025. It's funny because they've reduced their demand forecast for 2024. That's like when the analysts say, oh, where's Apple today? Okay, let's reduce our target to $1 above where it is today. But OPEC tends to be the most optimistic forecasting branch, so to speak, or institution. They tend to be the most optimistic of EIA, IEA, and anybody else that does it, FactSet, OPEC. Also in November, the EIA put out a report that they had about 305 and change billion barrels a day of demand and about 305 and change billion barrels a day of supply. We are balanced. We're actually balanced as of November for the first time in a long time I can remember. The reaction to that was crude oil rose 2.1%. Can anyone explain that?
The market, I'll take it first. I looked at it today and I talked about it on another show I was on. I think the market's saying that the Saudis don't know shit. You know what I mean? Like, and why do that, by the way? It is such a, again, this is chaos theory again. We have some of the greatest minds on our show, economics, and we don't get everything right about the domestic economy. And and I know that there are some very bright guys who work with the Saudis to try to ascertain what demand is going to be. But it is an extremely chaotic system. And I think the market is also saying that in the shorter term, that, like Stephen Moore told us when we sat down with him in Orlando, Donald Trump views this as a champagne bottle, and he's going to pop the cork off, and demand is going to increase. And Steve Rasciuto of Mizuho, I just heard his monthly video today, talked about how, yes, we may run bigger deficits in 2025, but Donald Trump is going to get tax cuts, significant cleaver to the bone tax cuts in the first quarter. So I believe demand for crude is going to be fine. I disagree with the Saudis. Anne-Marie.
So let me pull my tinfoil hat out of my drawer.
Sorry. Every time I've been accused of tinfoil hat, it comes out to be true, whatever we said.
I think a lot of times big organizations like this talk their game. And so they want to be, I believe that OPEC still tries to flex their muscles, and they don't have any muscles left. You know, they're Charles Atlas on the beach before. And so what I'm seeing is, we lost half the audience because they're all too young to know who Charles Atlas is. Okay, so what I suspect is sort of a little bit of gamesmanship, but I can't quite get the thread on it. What I do agree with you about is that I don't think they're talking about what they actually know. I think they're talking about what they think and what kind of narrative they want to drive into that next space that they're going.
All right, let's take a quick time out because there is a very special offer from Tradier. We are going to run a banner at the bottom. You will get 3 months free of the Tradier Pro. It's an options trading system. We've had some high-end options traders on this show, and when I go into this spiel without any sort of consultation, they said, oh yeah, I use it. It's fantastic. Bobby and I trade a lot of options ourselves too, by the way, so I'm not trying to lower our status too, but it is a big deal. 3 months free, no obligation. Please click the link, sign up for Tradier Pro. And let's, as long as we've taken a quick break in the action, Anne-Marie, tell them again where they can find you on Twitter.
So you can find me at Anne-Marie Trades. I'm on X. And if you're at IBD, you can find me there writing articles. If you're on Top Step TV on YouTube, you can find me there. I try to reach out to traders as much as I can because I'm at the point in my life where I get to do whatever I want to. And so this is what I feel like doing right now.
Last week we had a guy who has an algo trading system that he's designed that is doing quite well by all indications. So the question we asked him was like, why do you teach? Why don't you just trade? And I loved his answer, and I agree with it 100%. Trading full time is boring as shit now. You don't stand in a pit and have interaction anymore. And sometimes you crave community. I actually think it is perfectly sensible for screen traders to want to have a community and run. And again, I'm someone who likes to He is the center of the community. A 5'8" guy who needs to be important. So I loved his answer, and I love it. I love it today, Bobby.
Yeah, I tend to agree with that. I mean, I don't see any reason that answer should be adjusted at all. I couldn't agree more. I mean, from a perspective of what kind of goes on in hang on, I got to jump for 1 second, guys. I'll be right back.
Sure, no worries at all, because I do want to pivot over to, you talked about energy. Okay, one of the things that I've been talking about recently was uranium. I've been expanding my position in uranium. My thesis is AI takes a crap ton of electricity, quantum computing, crypto mining. Are you looking in that space at all, the electricity space specifically? And if so, how are you expressing it?
Absolutely. I think uranium is a fantastic energy resource. We've got to get people to not be afraid of it anymore. I am very much invested in that space, in the uranium space, but it's going to be a long road. We've got to change mindset about, I mean, I even talk to young people about it. I'm like, hey, nuclear energy it's amazing. We got to move. And they're like, oh, what? So we need folks out there that are saying, listen, we can do this and we can do it well. And we have to get rid of all that ridiculous hoop jumping that these nuclear energy plants have to go through in order to break ground. And then, I mean, it takes 15 years with all of the noise that they've got chalked in there. We have got to wipe that clean, find a good, solid way that's not paperwork intensive, but is safe for everything around, and then just move forward. We've got to get rid of some of the ridiculous regulation around it. So I think it's going to be a long road, and I only look for places when I watch the news and I see that it's fallen off a cliff. I'm like, all right, I'm buying some, and I'm sitting in it.
Sorry about that quick disappearing act. I had police officers at the front door, which hasn't happened to me in months.
Years.
They came for autographs.
They were actually at the wrong house. Yeah.
Good.
Yeah.
Good.
They said, are you Mr. Iaccino? I said, no, my name is Sam Jones. My name is LeBron James. Anyway, so in terms of uranium, so my favorite ETF for uranium is Sprott.
I was going to say that.
Okay, so I was going to ask you.
I love
what
all the Sprotts. Yeah, I love all the Sprotts. I do physical gold, platinum, and uranium.
Yeah, I just think those are like Sprott, and the uranium is obviously a minor. Now, I actually entered that at about $26, and I've been holding it. God, this is a long hold for me. It was March of 2022. Yeah, it was March of 2022 that I entered that, and it did well, and then it did poorly. And lately, it's just kind of been, I don't know. Do you think the slow sort of growth in that? And again, bought it about 26 or so, got as high as like 60, and now it's sitting at about 46. In my opinion, that really had a lot to do with this administration, just sort of the sideways move on it. Do you think there's any danger in terms of some of the sanctions that we've put on countries that provide us with some of the uranium and possibly some of the places they do business, or no?
Possibly, but I think it's, between Ukraine and Kazakhstan, those are our two spots that we get the most of the rich uranium oroes from, as far as my reading tells me. And Kazakhstan, Ukraine too. We just have to watch out for disruption. But at the end of the day, even if the sanctions come and they go, hey, we're going to put the screws to you on this, it's coming. It's absolutely coming. It's just a long time coming because we've got to get people not afraid of it. everybody thinks that, horrible things about, not that it wouldn't be bad if something melts down, but there's so many ways to capture and compartmentalize now. You just have to get people in a better space. But I'm more interested in how these governments and countries get stabilized rather than, what the administration might do, because you can pull levers, right? I mean, you can pull levers, and they could be as the biggest dog on the street. We can do just about anything we want to.
But hold on, but will we pull these levers? Will Europe pull these levers and try to make nuclear less of the boogeyman?
Well, forgive me, but I'm not quite sure the powers that be in Europe are either all sharing one brain and one person gets it at a time, irrespective of who's talking. But I mean, if you go from, hey, listen, we're totally ESG, like Germany, to cutting down trees and digging out coal, I have no idea what they're going to do. There just doesn't seem, they're so reactionary. Nobody's got a plan.
Yeah.
Nobody's got a plan.
The inmates are running the asylum over in Europe right now.
Oh, my word.
Almost everywhere. I mean, we knew that was always going to be the case in France.
Yeah.
You know what? I was just about to go on a rant that you two would have found funny. So just save a laugh in the back of your head. But I'm going to not. Bobby?
Yeah, it's funny you say that. And I wonder about, so you have this runway for nuclear power plants, right? I mean, obviously, long runway. First, you got to get past the environmentalists, who are completely wrong, in my opinion.
Yep.
And then you got to get started. And they take, am I wrong? And so what I hear is they take 10 years to build.
Yep.
And I wonder if that's something that I still think, and this is part of the reason I put on the natural gas position, is that's sort of the easier route.
Yes.
Right. I mean, natural gas is going through a brick wall. I'm sorry, your nuclear is going through a brick wall. Yep. Natural gas is walking around it, and the wall's only 2 feet long.
Exactly.
So that's why I put on the position I did.
Yeah.
Having said that, electric vehicles. I'm a huge backer of autonomous driving. I think the Tesla taxi, it may not be the future, but it's my future. I just think it's the greatest thing since sliced bread. Do you think the electric vehicle, obviously, Jimmy points out all the time, they took away the incentives. Where was it, Jimmy? In France?
In Germany.
In Germany. They took the incentives away and the demand just collapsed.
Yep.
Yeah.
Right? GM just got out of the autonomous taxi.
Oh my gosh.
They were competing with Waymo. They lost, actually, let me rephrase that. They spent about $9 billion on that project. And now they're putting it on the back burner, right? Ford moved away from that.
I know. Yeah.
Yeah.
They were losing $62,000 per EV to put it out on the street.
Yeah. Is that particular era dead or just delayed, probably in the way that it should have been delayed the whole time?
So my thought is the smartest space for us to go is a hybrid solution. Mm-hmm. And the reason that I like hybrids are I get distance, but I can curtail my usage because my vehicle is constantly powering itself a little bit at a time. And so the hybrid model seems like the best next step, as opposed to going straight from fuel to electric. There's a midpoint. And then if we stay completely electric, we've got aging power grids and aging power plants. And, every time we see some massive storm, nobody can charge their vehicles. Everybody's stuck. It's just, we don't have the right infrastructure to go completely electric right now, nor do I think listen, I would be very happy to drive a nuclear powered vehicle in whatever form or fashion. I mean, I'm totally open to it. Now, that's because I'm not afraid of the technology. I know what they're trying to do to make it safe and move it in, but it's sort of like, it feels like a Salem witch hunt to me. Hey, we can't use that because that's bad. And no real facts, but there are a lot of really smart people that are really trying to introduce and say, hey, listen, and then people go, oh, it takes so long to build one. And that's because of all the stinking paperwork and hoop jumping that they have to go through to get it done. And some of it's incredibly unnecessary. So I do think hybrid is the way. I'm not, listen, the wind doesn't blow all the time. The sun doesn't shine all the time. And electricity is still the most efficient way that we have to power things consistently. It's
All right.
just
So then in our version of marry, kill, or have natural human relations with, our version of that is buy calls, sell calls, or buy and hold. Where are you at with like something like Tesla, based on everything you just said, a stock like Tesla?
Well, I think Tesla is suffering from the Elon effect, right?
Mhm.
It's kind of a
Suffering?
halo effect right now. I would have to say I love unbalanced butterflies here.
Okay.
Way out in the distance, pretty far away, and just betting on one side or the other. As much as a 1x4x3, just levering it the right way in whatever form, both on the put and call side, because I think that halo effect, it might have a little bit of a reckoning, and then they'll move on to the next step to the upside.
Bobby knows that I smile when you say unbalanced flies, because that's literally such a big part of my trading strategy. I always, at one point in time, have some level of unbalanced fly on. And it's just so sexy to me to be able to define what you want, define your risk, slant your risk to, you want to be a little more directional. So if you, by the way, the way you trade, and I've known it in the past, I sometimes feel a bit, what is your duration on an average trade? Do you trade week to week or month to month for the most part?
Okay, so it depends. I trade primarily futures and options. And so I have a butterfly on NVIDIA that, I paid maybe $1 for, and it's about $280 now, but it doesn't expire until January of 2026. And so it depends on what I think the charts got going and what the very broad landscape is. If I'm doing an earnings trade, I might take a trade that's just a couple of weeks long, right? I'm going to look at the chains and go, wow, I don't think they have that priced right. So I'm going to jump on that. And so that might be 2-3 weeks. That's usually my major pocket. But for something big that I'm watching long term, it's very easy for me to put a trade on that lasts over a year.
By the way, that is, I make money in 2 to 3 week time frames. I trade, hour to hour as well, but that's just mostly to keep me plugged into short-term market moves. And historically, it's been a slight moneymaker, if anything, but I make money 2 to 3 weeks. Something interesting that you said about options, and again, I'm in love with options. On Monday, and Bobby knows this is true, I'm not just saying it after the fact, I sold some of my technology names, but then I was looking at other technology names to perhaps replace it. And I looked at Google, and Google looked like it could be breaking out of a pretty serious wedge. So I sold for every one 180 call, and I marked it out to February. I sold one 180 call to buy 2 190 calls. This was on Monday. I had no idea they were going to unleash some master chip on Tuesday. So it's better to be lucky than good. But that's the way I like to trade, something that looks like it could have a big move out of a wedge, out of a pattern that looks, because it was cheap as hell because I sold the one call and then I got the other call for a discount. I'll finance it. You do things like that too?
I do. I like ratio spreads. I like them a lot. Primarily in the last, I'd say 2-3 months, I have lived with iron condors because what I can see is a lot of slosh. This is really the first week that I've seen a break up over 3, 4, 5 weeks of sloshing. And then if you look down inside of companies like, NVIDIA or Palantir even, or so many of them, they're just in this big, broad, nasty space. And there's nothing better than the short iron condor. It just erodes all day long. And,
Making money when you sleep. For those people watching too, an iron condor, there's a couple different ways to think of it. Basically, prices here, you'd be selling a put spread, selling a call spread. So if it settles in between the two, you make whatever you sold it for. I'm describing it right, aren't I?
Yes.
Yeah, you are.
If it explodes through one of them, you lose the money on that one, but you make the money in the other. So usually the losses are relatively small. But what you want it to happen is just to kind of languish and decay yourself into money. Making money when you sleep. We love theta. Anyway, continue.
Yeah. And so what I'll do is try to get about 50% of what I collect. And then, I'll close it maybe 20 days before expiration because I don't want it to go sideways on me.
Right.
And yeah, sometimes it's a little bit, sometimes it's a lot. And then, with the very cheap butterflies, if you're trading earnings, I mean, yeah, you lose a lot of them, 20 cents, 20 cents, 30 cents, whatever. And then some of them end up being worth $5. And
Right.
so, it's a nice game. It's a fun game.
I'm going to put something up on the screen. Actually, Luis is going to put it on there for me, but it's not me. It's from It's Stock Charts on Twitter. That is ITZ Stock CHARTZ. If you guys don't follow him, you should. He put this up on Twitter directed at us because we were talking about uranium and natural gas. And this makes me feel I don't know if that's what you were trying to say. This makes me feel really good about my natural gas trade.
Yeah.
Even though it's a very short period of time, this is what we would call in the fund of funds world, data farming or cherry picking or whatever you want to call it. It's only back to 2020 and obviously the pandemic, blah, 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 whatever. But they tend to correlate, at least going back to 2020, until about the end of last year, in which case they diverge quite a bit. And this tells me that natural gas has either got a ways to run in the upside or uranium's got a ways to go. This kind of makes me want to hang on to my natural gas and sell out of my Sprott a little bit, but I don't want to make sure. I'm just going to leave it the way it is since I'm up on the uranium trade.
By the way, I want to get involved in the natural gas trade too. I'm going to look at it technically too. And what do you think are the best ways to go? Oh, by the way, it's Stock Charts. That's Remo, right?
Yeah, that's Remo.
We love you, Remo.
Remo's a great guy. And again, if you guys don't follow him, you're making a mistake.
Follow Remo. But what's the best way to put on natural gas? Amory, start with you. What do you think is the best way to express yourself in the natural gas?
Well, I'm going to trade the futures, and I'm just going to roll the contracts as they come along, right? So I'm just going to be long it. What I'm looking for is a little bit of a dip because it does look. I was looking at that chart. It's got some resistance right where it's sitting, and it could break out. I'm just so used to watching it collapse around February, March, that I don't know. I want to see it move, and I'm going to trade around it in the future space, right? So I'll have a few of them. When they break out, I'll cut the trade by half or 2/3, let it come back, add back to full size, and then just trade up with it over the long haul and see
Bobby,
how it
what do you
rolls.
think? Future's the best way?
I am in on futures, but Boyle is the best ETF to me.
Yes, I
It's
love what you
also,
said there.
yeah, it's an extremely aggressive ETF because it basically it focuses on the near month NYMEX natural gas contract, which is what Anne-Marie and I are both looking at when we want to do natural gas. But it also kind of uses leverage, and it sometimes offers 1.5 to 2 times the movement of the actual natural gas contract. So if you feel pretty strongly about it, Boyle is the way to go. It's an aggressive. I'm gonna say it's not unaggressive. It's aggressive. Why the fuck would I say it's not unaggressive? It's an aggressive way to
It's a
get
clumsy
long.
way to say that, right?
Yeah, that's very clumsy. But yeah, that'd be the way to do it.
I guess, I'm Bobby and I, as you know, Anne-Marie, we're futures guys from forever. Which, by the way, CME, you should be throwing more sponsorship money towards Tradier and toward us because we talk about your damn products all the time. Yes, we love you guys and we're in this together, but it'd be nice for you to just throw us a bone here and there.
Yeah, they're cheap.
Anyway, if you, in closing, because we're coming up against time here, what is the most interesting thing to you, I guess, from the long side over the next quarter?
Wow. That's hard for me simply because we're still looking at an economy that's very bifurcated, and the top 10% is literally spending all of the money.
That's what I believe as well.
The bottom 90% is just scraping by. And so I'm cautious across the board. I truly am. I pulled more into cash. I continue to just trade light and tight. I would like to see energy stabilize somewhere and then watch that move. I am very interested in continuing with long gold because, as we know, fiat currencies are just a flaming bag of poo. And what we have to do...
Can't believe you use that language on our show.
I know. Please forgive me. I'll go into timeout right now.
You go to the corner.
Yeah. We know that central banks are still buying them on the cheap. They're buying them on the sneak, and they're buying it on the cheap, and they're going to continue to do that. And what I'm watching for is a move out of Bitcoin into a more leveling space, because I believe that Bitcoin prices are a proxy for true liquidity. And so I'm watching to see, all right, is this going to continue to climb? When it starts failing, particularly Bitcoin futures, when it starts failing, I know there's some sort of liquidity squeeze. And that's going to tell me, whether to tighten my belts a little more and where I need to tighten it before I head to the next space. So I'm pretty cautious.
They've expired now, but I was hedging my Bitcoin position with long put spreads in MicroStrategies. It's a freaking leveraged Bitcoin play, which, by the way, who in the hell needs a leveraged Bitcoin play? The thing moves 45% in 2 weeks. If you think you need a leveraged Bitcoin play, you might be too much of a cowboy to trade these markets in life. Bob, do you have any closing words, or should I play us out?
No, you can play us out. I do have someone sent me an interesting trade this week that I kind of want to bounce off people. We don't have enough time for it, but it was a way to basically buy a zero coupon bond, take the guaranteed dollar amount you're going to make on your zero coupon at expiration and put it into calls in Bitcoin ETFs. And this way you take this sort of house money and you take a shot at Bitcoin, but you have sort of a principal guaranteed investment. But long story, I'll save it for another show.
Very interesting.
Anne-Marie, tell them one more time where to find you. On Twitter at Anne-Marie Trades, correct?
Yes, that is correct. Find me on Twitter, Anne-Marie Trades.
Yeah, good. So anyway, this has been Tradier's The Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. As I said at the beginning of the show, the amount of gratitude we have for the support we've gotten on this project is immense. The amount of eyeballs we get, we are truly humbled by your support. Remember what Bobby and I are trying to do. We've been in legacy media for 25 years each. We found that in legacy media, you are oftentimes at the whim of an overzealous producer or an overzealous sponsor who tries to control what you say. We want platforms where no one can controlling what we say. What we say might be wrong. It might be bullshit, but it is honest to God what we think. We get great guests like Anne Marie, and we have great support from people like you. This has been the Tradiers, the Trader's Edge.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.